Bang. Welcome back to the Rebel's Edge, folks. I bet you recognize the gentleman right there, Marc LoPresti, because Mark does a lot of these Rebel Edges with Pete and with me. And Mark is former practicing attorney, recovering attorney, he likes to say, as well as a trader and somebody who was instrumental in forming a lot of hedge funds for various big wigs in the industry, right, Mark?
Sure. Well, I didn't know that we were going to do that, John, because the audience was just starting to like me. This is a twofer this week. I did Monday with Pete, Thursday, last show of the week with you, and you got to bring up the lawyer thing. Like, that's the last thing I mention when people ask my curriculum vitae, as they say in Latin. But yeah, 20 years as a securities lawyer, hedge funds, trading firms, all kinds of stuff, and still get asked to comment on the legal and regulatory side of the news stories and the stocks that we cover because, like Al Pacino said in The Godfather 3, every time I think I'm out, they pull me back. And that's how I feel sometimes. Back in.
That's right. Well, and we're pulling you back in, folks. We're going to kick it off, as we always do, with the macro. The macro minute today, Mark, I'm going to say the reason that the markets are soft, both foreign and domestic markets, is because people are worried about exactly how tough Jay Powell is going to speak about inflation and how hard he's going to have to go after it to get it down to 2%. And there's no magic wand he can wave, Mark, to get us to 2% like that. So I'd say they need patience as much as anything.
Yeah, I think what folks are really going to be looking for, John, is less about whether or not we've got another 25 basis point hike coming to us before we put up the Christmas tree or the menorah, as the case may be, or whatever you celebrate. But the reality of it is it's higher for longer, right? And that phrase we're going to hear a lot more as the market starts to digest even further that even if we only get 25 more this year and the Fed starts to cut in Q1, we're still going to have rates that are higher than the market likes for a good while. And that's not, generally speaking, a good thing for equities. Plus, 10-year hitting a 16-year high on Monday. Like at some point in time, the equity market cannot ignore the bond market. And we were saying that on the up days this week. My God, does the equity market know what's going on in the bond market? That can't sustain. The equity market and the bond markets will do what they do, inversely correlated, typically speaking, especially when you've got a yield curve that's been this inverted for this long. But I digress.
Well, I think that's well said about the macro, though. And I think now for our fantastic futures, Mark.
Fantastic futures!
There it is.
Yeah, it gets a little louder all the time, I know. I think that's Jared's way of saying, you didn't mention me at the top of the show. But fantastic futures. I'm going to say, Mark, that the 10-year not back to 436, the high that we hit this week, but instead at 422. It might not feel fantastic, but it feels better than 436. I'm talking about the yield on the 10-year. What would be your fantastic future, Mark?
Well, I'm still watching very carefully agricultural commodities. Pete and I covered coffee on Monday, which actually has gone down. It's softened rather significantly from the April highs, but I'm continuing to watch very carefully how agricultural commodities are performing, still generally speaking, trending higher. Again, as loyal listeners know, typically speaking, end of rate hike cycle, historically speaking, does tend to portend increases in commodities. That's part of that yin-yang that the Fed, any Fed, fights as they try to start to cut rates or stop raising rates. You've got commodity prices sort of pushing on the other side of the rope, making things at the grocery store still cost more. So I'm watching commodities very, very carefully. Generally, that's my fantastic futures for today.
Yeah, so neither of us have something that's all that fantastic.
Nah.
But nonetheless, these are the things that are going to drive markets, and that's why that's part of fantastic futures. All right, let's talk about NVIDIA, Mark. because they put up some astonishingly good numbers, 101% jump in revenue. That's pretty damn amazing. Revenue coming in at $13.5 billion. So they did pretty much what the CEO said last quarter, Mark. He said, we see a fantastic drive for this stock going out years into the future because of the demand for our AI chips. And I will say, Mark, as I told our subs yesterday, that you can only sell what you've got. You can create backlog, but that's not the same as revenue. But what they can do is when they have something that's in big demand, all of us that like cars, Mark and I both like cars, if you want to buy that hot new, whether it's the Cybertruck or anything else, you're going to pay over sticker. That's what I think drove revenue in this case over at NVIDIA. They only had so many chips to sell. So you know what they did? They moved up the price, Mark.
Yeah. Basic supply demand. And look, everybody talks AI, and AI growth definitely helped drive these blowout numbers from NVIDIA, absolute blowout numbers from NVIDIA. But it wasn't just the AI sector. It's across the board. It's something we say all the time. We're big-time data nerds, as loyal watchers know, with that Battlefin business that I co-founded, that John is an investor and advisor to. Don't bet against data. We make more of it every day. With every time we pick up this device, we create more and more data. It's got to be processed through microchips, data centers, all of that. You got to be long-term bullish. We're going to touch on that on Splunk later. Same overall catalyst, AI and data generation in general, driving these stocks higher.
Absolutely. I mean, their data center was just astounding.
Yeah.
The numbers that they put up there, Mark. All right. So let's talk a little bit about a stock that you've talked about a lot since we've been doing the show almost a year and a half now.
Wow.
You've several times talked about trade down. And you've been right, because people do trade down when they're being squeezed by high inflation. They tend not to shop as much at the higher end retail. They trade down to a lower end, and that hurt, I think, Dollar Tree, DLTR, which is trading down double digits today, Mark.
Yeah, I mean, I'm not so sure I'm ready to throw the trade down trade out with the bathwater, John. I mean, they did beat estimates, and they indicated very strong sales, increased traffic in the stores, right? That, to my way of thinking, actually validates the trade down trade, people looking to stretch their dollar even further. The problem, though, is that even though the trade down trade, I believe, fundamentally is a good thesis, if people have less to spend, they have less to spend at Costco, they have less to spend at Dollar Tree or Dollar General or any of the dollar store trades, right? So I think that's part of what's happening. Plus, still massive long-term hangover from the acquisition of that competitor going back 7 or 8 years now. That debt overhang not helping matters. But I'm not ready to call the trade down trade dead. I think we're going to continue to see it in fast casual and fast food, in other areas, as people continue to stretch their already stretched dollar.
I agree. And I'm not saying it's dead either, folks. I'm just saying that Mark correctly identified this trade down, and that was literally at the same time as the stock zooming like this. A 10% drop after a pretty great several months, several quarters of revenue doesn't mean that trade down trade is over. Let's talk, Mark, about one where we had unusual activity, because we always love to cite these. This is Petco. And we're saying, you know what? Petco has fleas, apparently, because this stock is just getting spanked. They came out with some numbers, Mark, that basically they were forced to cut their outlook going forward. They say the consumer is stretched, just to Mark's point, and that pressures on discretionary spends, like maybe that chew toy or whatever it might have been at Petco, symbol WOOF. That's why we had this unusual activity, Mark. We had very strong buying of the 10 puts in September. That was when the stock was about $9. So these were approximately $1 and change in the money, because the right to sell it at 10 when it's trading at 9 is worth $1, obviously. Well, it traded down to 5 today.
Wow.
So that meant that you tripled your money if you had bought these puts on Petco.
Woof.
What?
Well, this is got to be one of my favorite stock symbols. Look, no doubt, this isn't rocket science here. You don't need the chew toy. You don't need the super expensive science diet if you're stretching your dollar. You know, Fido can have Alpo or whatever the lower grade dog food is. So they're experiencing that like a lot of other retailers, and a lot of the spend with pet stuff is discretionary. You don't need that Christmas sweater for the dog. But I think I'm in the Christmas spirit today. What's with all this Christmas talk?
I don't know. I appreciate it, though, because it's going to be over 104 degrees here in Chicago. We're here at SIBO Global Markets again today, shooting live from the floor. Mark and I will be shooting live, I think, at the New York Stock Exchange in a couple weeks. But it's always great to have live action behind you. And they really are trading back there. That's not a video. All right. Mark, let's talk a little bit about one more stock, Splunk, which plays right into your strength of the data does matter, because shares of Splunk climbing even more sharply than NVIDIA. The reason is that they see massive demand for exactly what they do, which is data mining. And this stock is up double digits because of it.
Yeah, we've been following this one closely. We cover it every time this stock reports. I love this company. I've been bullish on this company. Jared, you can go back and pull when we covered it last quarter and see whether or not I'm just Tuesday morning quarterbacking here. We've been bearish on Splunk for the entirety of the year. That's verifiable. That their cloud business exploding. This is not just hype around AI. What these guys do is bricks and shovels of data management. If they were an oil company, you'd think of them as a midstream player to give people some contextualization of what their business is. But I think, John, notwithstanding, take profit. I'm not saying don't take profit. Take profit, shorten your swing, as Pete and John say all the time. But this one, I'm going to continue to be bullish on over the mid to long term. Love Splunk.
They had over 800 customers, folks, that paid them $1 million or more for their software. So that's reoccurring revenue. People that are looking and spending $1 million on that software, that means that they think they're obviously making multiples of that, using the insights that they're able to glean from that data. I got to believe that this is one of the largest plays in data management and data mining, Mark. So,
they got a huge cyber business too, John, right? I mean, they have a very big cyber business, and that's unfortunately because of the threat associated with cybersecurity. That unfortunately is also expected to continue to be a growth business. Look, 14% year over year on almost just shy of $1 billion in sales. Not surprised to see traders rewarding this stock up. I looked at it before we went live. It was around up 15% on the day so far. Wow. Great day for Splunk shareholders.
Yep. Congratulations to all of you that own it. Now, this one, Mark, is one that Pete has talked about a lot, which is Ohtani. He is that pitcher, of course, for the Angels that has already hit over 40 home runs this year, which is so rare for a pitcher to basically be the designated hitter, but he is. But the other side of the coin is that Mark, who has been in the owner's box several times at the Cincinnati Reds, because a good friend of the show and a good friend of Mark's and mine has had Mark out there in Cincinnati, that would be Jack Wyatt, has had Mark out there in the owner's box watching the Cincinnati Reds play. And in this case, nobody was cheering for this, and that was that Mr. Ohtani unfortunately tweaked, we hope just tweaked, one of an MRI revealed that he had a tear. We don't know how bad it was, though, in his throwing shoulder. And so, but the good news is that the kid's so tough that he said, you know what, I still want to hit. I might not be able to pitch, so take me out as the pitcher today, and we'll do an MRI tomorrow, but let me still hit. He only went 1 for 5, so that's not exactly his average, but so he probably was hurting. But what a showman, Mark, and what a tough guy.
Yeah, incredible, the stones on this kid. Very, very impressive. He's definitely been one of the top 3 or even 2 to watch. The other, of course, being the superstar from the Cincinnati Reds, who we've talked about a lot, De La Cruz, just also outstanding. But look, I think these 2 guys and maybe a third, but I think that's your MVP favorites for the year, John. I think Ohtani still has a chance, as does De La Cruz, of MVP.
Yep. And I think that's just a great backdrop. A couple young guys, because Ohtani is, I think, 25 or 26. And obviously De La Cruz is just old enough to drink, I think, barely. But that kid, we'll be celebrating a lot with him because there's a real talent there, not just hitting, but the speed of that guy on the bases. You've got to see him stealing, folks. Those are incredible videos. All right,
Yep.
Let's finish up, Mark, with Messi. So this guy obviously propelled Argentina to the World Cup victory. He is one of the greatest soccer players alive. And there are some great ones, Ronaldo and Neymar and so forth, to name a few. But he came back against, he plays for Miami, the team owned by David Beckham down there in Miami. And they came back from a 2-0 deficit because of him. Is this guy just the GOAT for soccer, Mark?
You know, he is. He has lit Miami soccer on fire. I was in Miami last week, as you know, for a mutual friend's birthday. Had a wonderful and awesome time, as we always do in Miami, our second or third home. And the city is absolutely. You go into that Walgreens, John, just over the bridge. I know you know that Walgreens because we stop at it almost all the time before we come over the bridge to Collins. Just full of Messi gear and banners and pennants and this and that. Of course, my daughter, who I was lucky enough to have with me on that trip, had to scoop a bunch of that up to put pennants up in her bedroom and everything. But what an unbelievable – he is the GOAT. He's bringing another incredible win for Miami. I do, John, in the 10 seconds we have left, though, I do have a shout-out and a congratulations. So our own fantastic, also meteoric rise player who plays for our local Somerset Patriots here, a double-A division team, Yankees minor league team. I'll actually be at a game tonight in our box at our home stadium here in Somerset, New Jersey. Jason Dominguez just got promoted from AA to AAA. We're losing him from the Patriots. He's going to the Scranton AAA team, one step closer to the Yankees. This kid is one to watch. Anybody that likes minor league baseball, if you haven't watched Jason Dominguez play, check him out. And congratulations, Jason. We're going to miss you, but good luck over in Pennsylvania.
Good luck, Jason. And not surprised to hear that Mark, with yet another connection, is in the skybox at even a minor league park as well as the ones at the Cincinnati Reds. So no surprise there, Mark. You always
you know what a sports expert I am, John. It's really they want me there to, if the coach isn't sure what to do, I'm there. I'm like I can be on the field in seconds to help make those critical decisions that
I was going to say that exactly. Critical decisions.
Critical.
Mark's saying, send him home, send him home. All right. Well, folks, we appreciate you joining us. We certainly appreciate Mark doing yeoman's work, and 50% of the shows this week featured Mr. LoPresti. Remember, we will be coming back with Bulls, Bears, and Blockchain after Labor Day. We took basically a 10-day hiatus, but we'll be back after Labor Day with another Bulls, Bears, and Blockchain, as well as, of course, the Rebel's Edge, where you can see Mark and me and Pete. So until next Monday, have a great one, everybody. We'll be back at 1 p.m. Monday.
Thanks, folks.